All right, traders. Happy Wednesday. How's everyone doing today? As always, let me know if you can hear my screen, see my voice. Raymond, morning, early morning. I had an early one as well. But welcome back to the live trading room. We've been pretty on point with our analysis this year. I was just looking at things and talking to a few traders, and man, we're making some good calls, which is always good. Something that's important, very important. Hey, Billy, very important to remember as a trader is, we always talk about process over outcome when it comes to taking trades. You want to value the process of doing things the right way, following your rules over the outcome, because we have no control over the short-term outcome, but we can over the process. And if we're doing our process correctly, the long-term outlook will be, or outcome will be in our favor. But something you want to take pride in and take your wins is in making predictions. I think too many traders value the result, meaning, Raymond, for example, makes a good prediction on a pair, but he never gets an entry reason for it, and all of a sudden it's a bad trade. It's a negative. You got to remember that's a positive, because the best skill you can have as a trader, trust me on this, the best skill you can have as a trader is the power to make accurate predictions. Because guess what? If you can consistently make accurate predictions, all it takes is a little work. All it takes is a little bit of digging to create a rule to involve yourself in more of those accurate predictions, right? And that's kind of been the journey that I've been on as a trader. You guys know that I started off very reckless and unconservative, and then I went complete kind of 180. I went very, very conservative, super conservative, because I needed to stop myself from sabotaging myself. And as I got better, I was missing a lot of trading opportunities because of my conservative nature. I needed like 80 million things to happen to take a trade. And as I evolved, right, and as I got better in my predictions, I allowed myself to become more aggressive, to take advantage of more of the opportunities that I missed. So it's a natural progression that you guys will go through. Now, we're going to talk about, obviously, we're going to go to the market for you guys watching on the stream, TradingView and YouTube. We're going to give you guys two ideas today instead of one. We're going to look at the S&P and the Nasdaq, because they're two similar situations, but one is a little bit different. But before we do that, I want to do two things. One, I want to give you a look at the economic calendar. Again, we had Powell speaking yesterday. We've got some CPI coming out today for the dollar at 8:30. Really the only major news event that's on our radar for today. We've got some more tomorrow. And I want to talk about a tweet I got in Live Rumors. I want you guys to answer this, because this is an interesting one. I got a question from a trader. A question. Said, hey, Akil, I'm from Ohio. I usually trade 1 to 9 a.m. U.S. time, I'm assuming. But lately, all of the dollar crosses have been ranging and going bullish. Do you think the trend has changed? And let me ask you this question. How would you guys answer that? Or is there anything that you pick up that is kind of a red flag? U.S. crosses have been ranging and going bullish. Do you think the trend has changed? Is it a question that you can answer? Again, that's maybe one of the first things we need to talk about. While you guys are typing in, Billy says, I'll be wrong in the next candle, but correct on what I said going forward. Thoughts, should I do a 3-day prediction? No, I just think you should do overall analysis. I don't think you need to base your prediction off of a single candle, rather an area or a location of where you think the reversal, breakout, turnaround, whatever it is that you're predicting is going to take place. I don't think you need to worry about a single candle. Worry about the location, overall analysis. Jagger says, is the chart going from bottom left to top right? So here's a few things, right? One, it's an impossible question to answer, and these answers always frustrate me, because what is bullish trend? Is there such thing as a bullish trend? Is there such thing as a bearish trend, just in general, right? With the information that I was given. USD crosses have been raging and going bullish. Do you think the trend has changed? No, right? It all depends on the trend depends on the pair, depends on the time frame, to a certain extent, depends on the trader's eyes as well, right? So there's you can't answer a question like that. But more importantly is, if you don't know how to identify what the market is doing, that is a red flag, is it not? If you have to ask if the trend has changed, is that a positive sign for someone who is actively trading? Right? Yeah. It's 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 not. It reminds me of the days again back, and I told you I started as a trading bum. I started as a trend trader. And the moment that made me realize I had no idea what I was doing was when someone asked me, Akil, what is the market doing, or what trend are we in? And I couldn't give them an answer. And I'm supposed to be a trend trader. So yeah, we should have rules. There should never be a question of, hey, what is the trend doing, right? If you're a trader, you should have rules that identify what we're doing. And if you're not sure of what we're doing, we're most likely in consolidation, or when in doubt, stay out. But we went in to dig in. I talked to this trader. He did present some rules for trends. Again, it's still a massive warning sign that you have to ask, do you think the trend changed? So we don't know how solid those rules are. But another thing that stood out was this trader talked about, hey, I started trading, I think last year. He had a 17% month in November, and now things have dried up. And this reminds me of the conversation we had last week about panic in the market, right? November was only a few months ago, right? If you don't count December as a trading month, it was really only about 1 month ago. You had a 17% return in November. Is there any reason to panic so soon over slow markets if you just had a 17% month? People are out here trying to do a 17% year, right? No, right? There's no need to panic a month later, right? But this is what we talked about with the dangers of a new year, right? All of a sudden you get excited for a new year. We're what, 2 weeks in, 3 weeks in, 2 weeks into a new year, and things are maybe a little bit slow for you. Maybe you're not getting opportunity, and all of a sudden you panic and you make mistakes, or you throw something away. So the same rules that you had to create that 17% month, all of a sudden you're throwing it away because the last 2 weeks have been slow. That's not treating your trading like a business. That's treating it like a gambler, where you're just in it for action, right? This is a business. You made your 17% literally a month ago. Again, two if you count December, but no one counts December. You literally made it a month ago. Relax. We're 2 weeks into the year. But so many traders are so quick to bail. So two red flags in that conversation. One is you should not have to ask what the trend is if you're live trading and you're a trend trader. And two, you got to relax a little bit. Relax, all right? So let's start off. We're going to do a daily double for the streamers. Then we got a few things on my radar today. We're going to start and revisit. We looked at this yesterday. We looked at the Nasdaq yesterday, right? Yeah. So we looked at the Nasdaq yesterday. Let me just get my notes ready so I know that we did opening. It's called opening rant. You guys love it. Opening rant. And then we're going to head to the Nas. We're 8 minutes in already. And we identified this beauty of a candle right here, right? If you're someone that's in the candlestick analysis, you love this. You love this. You love this. You love this. It's a beautiful pin bar. It's right at the bottom of a consolidative period. It's at a structure swap zone as well. So you can see the bottom of this recent channel, right? Finding support at a previous level of resistance. That's that structure swap. Or if you're a Peter Brandt fan, called the ice zone. A beautiful 3-bar reversal down there yesterday. We were saying if we can get a higher high, higher close, that would be great confirmation for a buy. What did we get yesterday? We got a higher high, higher close, right? So a very good sign here on the Nasdaq. If you just look a little bit to the left, right, we've had a similar thing happen right there. So I think it's an excellent opportunity if you were someone that was waiting for that confirmation to get your buy order on. And then as we talked about yesterday, looking for a retest of the highs and then a continuation from there. We also looked at an alternative way to look at this as well. If we go down to the 4-hour chart, right, we break those candles down a little bit more. And I forgot who I was talking to about this. It was you, Rafa. It was you, right? This morning you were talking about we were going back and forth with the daily strategy. Are you still in here? Oh, Rafa left. No. Nope, that's a. Are you in here? I don't know. I can't see. But if you are, we were talking about a daily strategy. No, it wasn't you, not Raphael. It was a different one. We were talking about a daily strategy, and we were going over some interesting rules. There was a lot of work that needed to be done. There was a lot of it was a weird conversation, but we got to the point where we talked about he was now talking about, well, could I go down to the 4-hour as well? And I'm like, my answer, I'm a smart ass. I'm like, well, you could. I don't care. You can do whatever you want. It's your trading. I'm like, does it work with your lifestyle? Is it something that you want to do? But we're talking about the pros and cons of going down to a 4-hour, right? And when you go down to a lower time frame, again, all it is a zoomed in view. So it's not a good thing. It's not a bad thing. It's just a different perspective, right? So what you're going to see on a higher time frame is this. This gives you a lot of information. For many of you, it's all the information you need. You go down to a lower time frame, it's just going to break this up into kind of a more zoomed in views, like you're looking under a microscope. And it can give you even more information, which can be beneficial. So there's nothing wrong with going down to a lower time frame. I don't think you need to feel like you have to go down to a lower time frame. It's all going to be a personal preference. And like we always talk about with trading, first and foremost, you want to wrap it around your lifestyle. What are you able to do? That's the first thing. Real quick, a guy on TradingView says, yeah, relax. Great words, right? When in doubt, traders must keep their head on their shoulders. Yep. When times get slow, when you're in a drawdown, you got to just relax. And my best advice is find a community. I spoke to a trader the other day as well. I speak to a lot of traders. I got to stop telling people to reach out to me on social media. A guy was panicking because he was all alone. He was in a drawdown and he didn't have anyone to go to. And he's like, I think community is important. If I find someone to talk to, I'm like, yeah, it's everything. It really is everything. When we designed Tier 1 trading, the whole philosophy was around that community aspect. And then Forbes did an article saying you guys are awesome for doing it. But back to the charts. So we go down to this lower time frame. We break down this 3-bar reversal. And what are you guys seeing? Naomi says it literally is what keeps you saying. 100% truth. And this is coming from someone who tried to do it himself for the longest time. And I did not become successful until I found community. And sometimes it's just someone to talk to. Someone to talk to, a second pair of eyes, someone to point something out, someone to slap you on the head when you're doing dumb stuff, someone to tap you on the butt and say good job when you're doing good stuff. It makes a world of difference, trust me. That accountability is needed. And I'm highly self-motivated and I needed accountability. But yeah, Cody mentioned head and shoulders setting up, right? So again, and this is going to be a breakdown of a repeat of yesterday, but the guys on the stream didn't see it. And you guys know analysis doesn't change too much. So we like to go over these things again. But we came down, small retracement, extension. We're coming back up to the top, right? We're holding this line right here. This was the line that we want to see broken. This level right here. This is the high of that. If I can get my lines on right. Hey, thank you. Good to see you as well. This is the highs that we want to see broken. Now, again, does it matter whether this turns into a head and shoulders or whether it just breaks and closes above? Does that make a difference? Someone says I'm looping on YouTube. I don't know what that means, but sorry if I am. Does it matter if it's a head and shoulders or not? Going back to Foundation 2 stuff about 3 ways to trade. Obviously, there's no negative in labeling it a head and shoulders, but what's the key point? The key point that we need to pay attention to, whether it's a head and shoulders or not. What's the main things I want you guys to focus on? I don't want you to get sucked into all of the names and the shiny stuff. I'm not saying that stuff's not important, but sometimes we get distracted by memorizing stuff. Like a certain trader I used to know who studied candlesticks and may or may not have drew candlesticks on index cards with the name on the back and quizzed himself every night to memorize them. One of my friends did that. Not me. I would never. I'm super trader. I would never do that. I was really good at identifying patterns. I had no idea how to actually use them. I had no idea how to actually practically apply them. But I can spot a harami for days away. I was on the chat forums, harami, setting up euro dollar. Well, how do you trade it? I don't know. That's your job. I just know the name so I can sound important. But yeah, so it doesn't matter if this is a head and shoulders or not. What matters is the violation of this level. What matters is the violation of this level. Now, again, a head and shoulders can give us different clues, different tactics, all that fun stuff. What matters at the end of the day is the head and shoulders at this level. I got a question on YouTube. What are your thoughts on the pound yen? I'm sorry, but we're for the live stream, I'm only going to go over kind of the top trading idea on my radar for the day. Today, I'm going to give you guys two of them. Pound yen didn't make the cut today. In general, though, bull flag on pound yen. Not a lot of room to the upside, but bull flag on daily 4 hour, I believe. So yeah, so this is that key level we want to see violated. And again, either whether you're using this on the 4 hour, whether you're looking at just the bigger picture on the daily. I think it's a good buying opportunity. Now, we can come back and revisit this a little bit in the live room. I want to compare an opportunity to you and see if you guys can catch something. I thought this was pretty cool. So we got this on the Nasdaq right here daily, right? Take 2 seconds, just look at this setup, and I can even zoom out for you. Look at this setup here, right? Now I want to go to the S&P, and I want you to take a look at this setup. Would you guys say it's pretty similar? Very similar. Anything stand out that's different? Could trade a right shoulder pullback. Yep, that'd be an aggressive move going back to the Nasdaq. Could wait for a Cody special. If we break that level, then come back. Yeah. So notice the series of higher high, higher closes, or the higher highs and higher lows, right? So we're in that sideways channel here. Basically, we have it with this level. We then put in the higher high. This pullback, right, is a higher pullback. So what clues does a higher pullback give us? Again, following up off of yesterday and every other single day we talk about it, we're looking for imbalances. We're looking at the battle of buying and selling. That's all we're looking at, right? What clue do we have of a certain side winning or losing this battle? What would you guys say? Yep, we have the beautiful long wicks, right? But we also have that with a series of higher lows. So each time the sellers have been able to push this down, have they been gaining momentum or losing momentum? Gaining strength or losing strength? They've been losing strength, right? Because they haven't been able to push it back as far as before, right? Imagine tug of war, right? You're tugging it, and each time you tug it, right, the other team tugs back, and that flag gets closer and closer to their side. You get closer and closer to the mud, or falling off into a death pit if you're a Squid Game fan, right? You're losing momentum, and you try to tug back, and you tug back a little bit, but then they tug you even further, and then you're getting closer and closer to the mud or the death pit if you're a Squid Game fan. Either or, right? Same situation here. So sellers are pushing down, right? The market's come up and they've pushed down, and buyers have pushed back up, right? Equal highs, and sellers have pushed down. They've gained essentially the same level. Buyers pushed back up. They gained some highs, right? This is a big win, clearing structure. Sellers push down again. Not only do we see the specific candlestick, but we can see the location of that candlestick. And of course, we have the higher high, higher close setting up right now. We don't know if it's going to be a higher high, higher close yet, but as of right now, we do. And of course, if you go down to a lower time frame, you're going to have that already. So I thought it was cool to compare those two situations because they are similar but different. But the differences are minute. Differences are very small. But as we know with trading, it's going to be those very small differences that can make the difference between a trade and a non-trade, between a good setup and a bad setup. So we have to learn how to pay attention, to the details. And the details are typically basic things. But again, sometimes we get so distracted by the fancy stuff that we tend to forget about the basic things. And Trust me, in my experience, if you can master the basics, those are going to be much more important than the fancy stuff. So cool stuff here. For you guys that are watching on YouTube or Trading View, I'm going to kick you out now. Do me a favor before I boot you out. Hit that like button. Leave any comments if you have any questions about anything. I'll see you guys tomorrow. Same time, same place.